Thank you for joining us for this webinar, Finance in Unions. I'm Pauline Wilson, and along with my colleagues in the stewardship team, we're delighted to host this event. Tonight, we're going to have a 15-minute presentation, followed by around 50 minutes for questions to our panel. And we've received a lot of questions in advance. And can I just thank you very much for engaging with this and taking the time to submit these to us, to give us time to prepare. We'll do our best to cover these within the allotted time, but it's quite possible that we won't get through everything. So we will follow up with a handout of the slides and the questions and answers, including any that we don't manage to cover in the webinar. I'm really pleased to introduce our speakers and panelists for this evening. From the finance team, we have Jenny Simpson, Head of Finance and General Treasurer. We have Leanne Thompson, Deputy Treasurer with a remit for the wider church and statutory corporations. We have Lisa Erskine, the Congregational Finance Manager. From the General Trustees, we have Robert Lee, Project Surveyor. From the Law Department, we have Madeline Sproul, Solicitor. From Faith Action, we have the Reverend Angus Matheson, Presbytery and Partnership Support Manager. And we have the stewardship team, that's Fiona Penny, Catherine Southern and Darren Phillip, who are all helping to support this event in different ways. Before I hand over to Leanne, I'd like to share some verses from the second chapter of Haggai, reading from the middle of verse 4. Be strong, all you people of the land, declares the Lord, and work, for I am with you. This is what I covenanted with you when you came out of Egypt, and my spirit remains among you. Do not fear. This is what the Lord Almighty says. In a little while, I will once more shake the heavens and the earth, the sea and the dry land. I will shake all nations, and what is desired by all nations will come, and I will fill this house with glory, says the Lord Almighty. The silver is mine, and the gold is mine, declares the Lord Almighty. The glory of this present house will be greater than the glory of the former house, says the Lord Almighty. And in this place I will grant peace, declares the Lord Almighty. Let's pray. Dear Lord, the church of the present and of the future might look different to the church of the past, but we grab hold of your promise of a new thing to come, something more splendid than all that has gone before. Remind us of our calling to be your church, to offer ourselves fully into your service, to be your hands and feet in the places we find ourselves, to continue your story and to encourage others to join in too. We thank you that you are indeed with us, and we seek your guiding presence in our midst this evening. We make this prayer in the precious name of Jesus. Amen. Now I'll hand over to Leanne Thompson. Thanks, Leanne.
No, thank you, Pauline, and for seeing us through those technical issues. I think I've got the easy job. So, we know that forming unions has wide-ranging implications, and congregations are in different stages of progression towards a union, or you might have even united already. This webinar is focused on the financial aspects of unions, and whilst doing so, it might touch upon other areas. That's why we've got a range of people from the national offices here to help address these in the Q&A at the end of the presentation. So what we're going to cover tonight? Well, as Pauline said, we've got a short presentation which will cover, firstly, the basics of what happens in a union before giving an overview of different topics. And it's really in the Q&A that more detail will be given. There's also a guidance note on unions, which I know many of you have read already. It can be found on the Finance Resources page of our website. Hopefully someone will pop a little link to it in the chat just now. And it will also be shared in the follow-up material, which will go out after the webinar. Next slide, please. The basics. So, planned unions are contained within presbytery mission plans. And a union occurs when two or more congregations combine into one legal entity. To progress a union, a draft basis of union is prepared by the Kirk Session of the Uniting Congregations and Presbytery, and it sets out key information related to the union. There's more information on the approvals and requirements around the process in the guidance notes on the website. So how does a union actually work? Well, legally, there's deemed to be a continuing charity and a ceasing charity. This is because only one congregation in the union actually remains on Oscar's charities register, and the other congregations are removed from the register. This enables the one that remains to change its name, becoming the New United Congregation. And that's why it's referred to as the continuing charity, whilst the charities removed from the register are referred to as the ceasing charities. Now, these labels help explain what should happen from a legal and regulatory point of view, but there's no difference in the status of each congregation who unite. Both the continuing and the ceasing charities form the New United Congregations. So the basis of union will specify which charity number is being retained. We do recommend that it's the largest charity. We say largest, we mean in terms of net assets, whose charity number is retained. And although that's not a regulation, in our experience, it makes things easier, which will become clearer when we talk about how we account for unions in the next slide. I just wanted to highlight that it's the law department that apply to Oscar on behalf of the United Congregation for the name change, and it's following the union, they'll also notify Oscar to remove a charity number from the register. So there's no need for congregations to do that. It's dealt with by the law department. And Presbytery must ensure that all unions and name changes are notified to the law department 35 days in advance of the union. Next slide, please. Okay, on to the annual accounts. So the ceasing charity, the one that's removed from the register, they should prepare accounts from the beginning of the year. So from the 1st of January up to the date of the union. Because the ceasing charity is removed from the register, there's no actual requirement to file these accounts with Oscar. And lots of people find that a bit odd. You know, you've got accounts, you've got the numbers, you want to submit them, but you don't actually need to submit them to Oscar. Your efforts are not wasted though, because we need a copy. Stewardship and Finance need a copy, and so do Presbytery. The reason we ask for these is so that we can recalculate Giving to Grow, but it also gives us assurance over the balances for incorporating into the full accounts of the continuing charity. So they are useful. I would say that we don't need the whole full set of accounts with the trustees' annual report. We just need the actual accounts, the numbers, and that these should be independently examined. So what happens about the continuing charity? Well, the continuing charity prepares accounts for the year, and they should include the ceasing charity for the period from the date of the union. And they show the funds, the net assets being received from that ceasing charity as income. And that amount, when it comes in, is shown separately as a transfer of union balance. And we call this the acquisition method of accounting. We've agreed this with Oscar, and it's deemed to be the most straightforward. It means that the prior year balances would just be those of the continuing charity, and no restatement is needed. Next slide, please. However, there is another type of accounting method you can use, and this is called merger accounting. It's different because there's no transfer of assets from one charity to another. The accounts are presented as if the congregations have been united for the whole year, even if it was only, for example, from July. But this means that the prior year balances, the comparatives are restated as well. And it's the book value of assets are required compared to the acquisition method, and it being the fair value of the assets. Now, in terms of the audit threshold, I'm sure you'll be aware that if income is £500,000 or over, then an audit is required, even if it's for 1 year. And this isn't our rule, it's in legislation. And if the acquisition method is used, because the assets of the ceasing charity are transferred to the continuing charity as income, it could take the United Charities accounts over this threshold in the year of union. However, the merger method doesn't require that transfer. It consolidates all the balances together. So it makes an audit potentially less likely, and it's something to consider. Now, there will be template accounts using this merger method published on our website soon, so watch this space. Next slide, please. Gift aid. And this is something that we get lots of queries about, and HMRC should be contacted to make them aware of the changes resulting from the union. We've been in contact with HMRC and they've advised that the United Charity actually needs to register as a new charity by completing the CHA1 form. This might seem a bit strange, and HMRC have acknowledged that it's at odds with the approach taken by Oscar, but nonetheless, that's what we need to do. The information required for re-registering as a charity, it's set out in the guidance document, and it includes things like charity constitution, the Oscar charity number, amongst various other things. But as I say, it's all set out there and on HMRC's website. In terms of gift aid declarations, the good news is existing gift aid declarations don't need to be updated, but any new gift aid declarations should be in the name of the United Charity. The reason why you're allowed to keep the existing ones is because HMRC's guidance explains that where a charity changes its name, for example, because of a merger, a union, the charity won't need to obtain a new declaration, I think that word is tricky to say, from a donor, so long as the charity can show beyond doubt that the name of the charity on the declaration is a name previously used by the charity, which obviously we would be able to do. And you should note that it's important all gift aid and GADS claims should be made for each separate charity as soon as possible after the date of the union, but before registering the United Charity with HMRC. Okay, next slide, please. Giving to Grow. So the Stewardship and Finance team, we will issue revised Giving to Grow statements for the United and the Uniting Charities. And it sets out Giving to Grow, which is payable from the 1st of January up to the date of the union for each of the Uniting Charities, but also the Giving to Grow, which is payable from the date of the union to the 31st of December for the United Charity. And it's the income bases of the congregations uniting, which are added together to calculate the revised amount for the united congregation. We would say, please keep your current standing orders in place until we have revised the statements and reissued them. And when we do come to recalculate Giving to Grow for the united congregations, these are prepared to ensure that the united congregation doesn't pay more in the year of union under the adjusted form compared to the previous form. And where an adjustment results in a significant reduction in charge income, the General Treasurer may, on application, apply a further decrease to the contribution. So we really need to see this, though, in the annual accounts of the United Congregation for a full year. Next slide, please. We advise congregations to obtain an understanding of the finances of the congregations that they are going into union with. This is part of your duty as a trustee. So you should ask the treasurer of the relevant congregations for a copy of their annual accounts. You can also go on Oscar's website and should be able to find a copy there. Because it's important to highlight really that following a union, the assets of a charity combine, but so do the liabilities. So if there's shortfalls in congregational contributions which exist, a plan should be put in place to address these. And if there is a building which is vested in the general trustees and it is sold as part of the union process, then shortfalls could be met from the sale proceeds. Next slide, please. Bank accounts. So rather than opening a new bank account, which we all know is very difficult, we do recommend keeping and renaming an existing account. So this doesn't necessarily have to be the continuing charity, although that could be a factor in the decision. It might also depend who will be the treasurer of the United Congregation, but it's for the trustees to decide which bank account will be retained. And on that point, you should receive an email from us asking about who's your new treasurer. So if you haven't heard from us, from the finance team, then please get in touch. And also, please get in touch with us and tell us the details of the retained bank account. And if there's different accounts for different types of income, please include that detail. You should email our departmental email address, which is sfadmin@churchofscotland.org.uk. So the bank will need proof of a name change, such as an extract from the charity register, to update the name of the bank account. And it was just really to flag that the change of name and actually also removal from the register, they don't happen automatically. These forms are sent to Oscar by the law department. And whilst Oscar usually turns around quickly, it can take a week or so for the new name to appear. So keep that in mind. So remember that the account now, you've been through the change, you've decided which one's been retained and you've updated its name. Consider it's the United Congregations account, and so what bank signatories are appropriate, and this should be updated. We would always recommend that there are at least 2 bank signatories for all accounts held, and that appropriate controls for payments such as dual authorisation are put in place. And please don't close bank accounts too early. Keep accounts open for a short amount of time after the union to allow standing orders, gift aid claims, haul-lets and so on to be received, as well as any other direct payments to be made. It's once you're confident that all the income and all the payments have been changed over to the new account, the old account can be closed and transfer any remaining balance to the United Congregations bank account. Next slide. Funds and legacies. So funds held for the benefit of the congregation by the general trustees will be combined following the union. So if you hold funds in the Consolidated Fabric Fund or the Consolidated Stipend Fund, the general trustees finance team will combine these. There's no need for you to get in touch to ask this to happen. And this is the same for Investors Trust. So congregational funds held with Investors Trust, they'll also be combined. We often get questions, people asking, how do I transfer this to this account? And how do I do this? What form do I have to fill out? And it's just to reassure you that there's no form or no instructions that you need to give in, that that's a process that will be done internally. And a new certificate of investment will be emailed to the treasurer. But in terms of general funds, following a union, these should be combined. However, restricted funds are different. They can be combined, but only if the purpose is identical. So if the United Congregations had a restricted flower fund, for example, they could all be put together and combined. But it's actually a really good time to look at restricted funds and perhaps see whether they need reorganised. And it's worth mentioning that where there is a restricted fund for use in a specific building, which is to be disposed of as part of the presbytery plan, we have successfully applied, I say we, I mean the law department, applied to Oscar on a number of occasions to use the funds for the remaining congregational buildings, but it depends on the circumstances. So contact the law department for advice around reorganisation of any funds. And then the last point I want to make on this is about legacies, because this is another one that we get a lot of questions on. And, what happens if somebody leaves a legacy to a specific congregation, it then unites and changes its name? And the good news is that legacies left to a ceasing charity are not lost because the legal identity continues into the United Congregation. Now, this is different for a dissolution, which terminates the legal existence, and so any legacy that wasn't payable yet becomes lost. Next slide. And this is my final slide. Just to highlight a few key points on buildings. The first relates to insurance, and this is really a plea from the Church of Scotland Insurance Services, which is get in touch with them, tell them about your union, tell them the date of your union, and more than that, if you have any potential unoccupied buildings, then please let them know of that as well, and they can give you some advice around that. Now, the general trustees advise that congregations should continue to hold services in their church until the property is sold. the next part relates to water rates. Now, this is Scottish Government regulation, and it relates to the charitable exemption, which exists where gross annual income is less than 300,000. But a union could push income over that threshold and rates could become payable. Now, the rate year runs from the 1st of April to the 31st of March, and it's based on gross income per the most recent set of annual accounts. So it was just to highlight really that the date of the union and also the accounting method, bearing in mind that there could be a transfer of union balance, which is included within income, that could take you over that threshold. So just keep those things in mind when you're thinking about the date of your union. Okay, that's me. I will hand you over to Darren now for the Q&A. Thank you.
Thanks, Leanne. As Pauline said, we've had lots of questions, so we'll try and get through as many as we can. First couple of questions relate to bank accounts, and I wonder if I could give this one to you, Lisa. Do all bills have to be paid from the new United Congregations bank account, or is it okay to pay bills from the old accounts initially, given that these accounts need to stay open, as Leanne said, for standing orders to be received, etc.?
Darren, thanks for that question. Leanne has mentioned that we ask for bank accounts to be left open for a short period of time just to allow these things to happen. So it's fine for payments to be made from either of the bank accounts that remain in place, and also just to make sure that the accounts are available and open for standing orders to be moved over to new accounts, and for any monies received by way of standing order from the congregation also to be administered and changed.
Thanks. We've got a question about hall lets. Where a union is taking place on the 1st of July this year, will it be okay for June's hall lets to be invoiced and paid into existing bank accounts, and lets from the 1st of July invoiced and paid into the new bank account of the United Congregation? Leanne, do you want to take that one?
Thanks, Darren. Absolutely, yes. We understand that everything can't happen all at once, and that it's perfectly acceptable to keep an account open to make sure that you're receiving that income until such a time that you can transfer that information, that income over to the new account. So take the time, reissue the invoices the following month with the updated bank account details, and just be confident that you're going to retain that income in the new bank account before you do anything.
Great, thank you. And with regard to closing bank accounts, we've mentioned there that there can be a short period of overlap. How long should that short period be for an account to remain open before final closure? Does that relate to when a building is sold, or can it happen at an earlier date? And what should happen in the interim while all those accounts are open? Lisa?
Yeah, I think that it very much depends on the circumstances of the congregation for how long the accounts remain open, but we need to really bear in mind controls around bank accounts and making sure that these are in place. So again, just referring back to the administration and standing orders, really the bank account should remain open until the congregation are satisfied or are happy that everything's been moved across to the new bank accounts.
Great, thank you. Someone asked a slightly related question. Should we be advising church members to cancel their standing orders before the union date on the 1st of July? When are we likely to have new bank details available to give us an alternative? Lisa, can we stay with you for that one?
Yes, absolutely. So again, I'm probably repeating myself a little bit here, but again, that's one of the reasons why we suggest that the bank accounts remain open. So the answer to that would be no. You shouldn't ask the congregation to change their standing order details until they have moved everything across to the new bank account. And it's also a good time as well to actually reach out to the congregation to ask them to potentially look at their giving as well.
Thank you. We've had a question from a congregation whose accounts are business accounts. And because the congregation is not a limited company, to change the name on the accounts, they've been told by the bank they need a certificate of incorporation in their request. Can the church supply an equivalent document to a certificate of incorporation? Leanne.
Yeah, thanks, Darren. This is a really good question because I think it's something that people are asked by banks a lot. So there's no need for us to provide you with that because Oscar says this specifically on their website, that where a charity is asked for a certificate of registration or incorporation, you should send a link to your charity's entry on the Scottish Charity Register or print the entry webpage. So that's what you should do, and that should satisfy your bank. Obviously, if you run into issues with that, then please get in touch with us and we'll do what we can to help.
Great. And we'll provide a link in the handout afterwards that you can follow to get to your charity's entry on the register. We've had a question about funds. I wonder if I could bring you in on this one, Jenny. This is a situation where 6 congregations are uniting on the 1st of July, and that means that a large number of different funds, which are a mix of unrestricted general funds, designated funds, restricted funds, funds with the Investors Trust. They're asking, presumably we can combine the unrestricted general funds and the designated fabric funds, but can we merge designated funds that have a similar purpose? And what about the restricted ones?
Darren. The unrestricted general funds and the designated fabric funds can absolutely be combined. When it comes to the other designated funds, what I would suggest is that the trustees have a look at those and decide what's appropriate for the new United charge going forward. Designated funds are funds that you've effectively earmarked for future purposes, and what you had previously earmarked might not be appropriate going forward. So we'd recommend that you have a look at those. Restricted funds, as Leanne's already said, can only be combined where the restriction is absolutely identical. And I noticed that someone's put a question on this evening about whether you need Oscar's permission to do that. And I can confirm that you don't. If the purpose is identical, you can just combine them and just keep a record that that's what you've done.
Great, thank you. And just as a follow-up to that one, Jenny, if funds currently have separate bank accounts, is it okay for those to be retained and renamed where appropriate and audited, as is the case just now?
Absolutely, you can retain and rename the bank accounts, but just to note, it's not a requirement for you to have separate bank accounts for each of the funds. So if you feel it would be easier administratively to combine them, you can close some of the bank accounts.
Great, thank you. Madeline, I wonder if we could come to you on this next one. A congregation whose building is closing receives regular donations from an endowment trust administered by local solicitors. These donations are thought to be building linked, although Oscar's wording for the endowment trust charity indicates that the donations are for the congregation. Who should deal with this situation to ensure they can be transferred to the United congregation?
Sorry, I'm having trouble with my sound. I didn't quite hear, but I think I know what the question is anyway. Is it to do with was it to do with the wording and it's administered by a separate firm of solicitors?
Yeah, it's an endowment trust administered by local solicitors, and they're unclear as to whether it's linked to the building or whether it's for the congregation.
Okay, thanks, Darren. It will depend on the specific wording of the donation and what the donor's wishes are. And we would really need to look at the wording in order to advise how to progress that. But as Leanne mentioned in her presentation, we have been able to apply to Oscar successfully to reorganise funds which have been left for a very specific purpose to a very specific building. And if that building is closed, we ask Oscar if the fund can be used for the other congregational buildings. I'm sorry, I hope that answered the question. I can't really hear very well.
That's great, thank you. Leanne, I wonder if I could send you a question about the Investors Trust. Is it possible to access what deposits we have with the Investors Trust online?
So I will say not at this time, but that is something that we are working towards as part of the digital transformation. So, you know, that is definitely something that we're aiming for. But in the meantime, if you do require information on your funds held with Investors Trust, please contact investorstrust@churchofscotland.org.uk.
Great, thank you. And again, we'll send you a handout that has all the email addresses and website addresses on it, so you don't have to frantically scribble them down. Someone has asked in the guidance note on unions, in preparation of the 2024 accounts, the comparative year figures are those of the retained charity number. No consolidation is required to include the ceasing charity. When the ceasing congregations prepare their accounts up to the date of union, which for this congregation is the 30th of June, do they need to include the comparative figures for 2023? And Jenny, could you take that one?
Absolutely, thank you. What you've said is correct if you're using the acquisition method of accounting. The comparative figures are just those of the continuing congregation, the one with the retained charity number. The ceasing congregation will prepare accounts, as Leanne's already explained, up to the date of union, the 30th of June in this case, and will include the comparatives from its previous set of accounts. But where you need to take care is with the headings within the accounts, because for the income and expenditure, you'll have current figures which are for 6 months and comparative figures which are for 12 months. So you just need to make sure that the headings tie up. And obviously in balance sheet figures, they'll be at different balance sheet dates. So you just need to watch your dates and go through and amend things accordingly.
Thank you. Leanne, can a treasurer of one congregation which is uniting ask the treasurer of the other congregation for a copy of their last annual accounts, just simply for information?
Absolutely, yes. And that's something that I really want to stress, is that trustees should be aware of the finances of the congregation that they're uniting with. And a good way to do that is to ask for a copy of their accounts. The Charity and Trustee Investment Scotland Act actually requires a charity to provide a copy of its accounts to anyone who makes a reasonable request. But hopefully you would need to quote any legislation here. I'm sure everybody is willing to share their information to make sure everyone's informed.
Thanks. Lisa, should treasurers try to get a congregation's annual Oscar return submitted before the date of a union? And if so, are presbyteries going to be in a position to be able to attest these? If Oscar's been informed of the union, can 2023 figures still be reported under the old charity number once presbytery has approved the 2023 accounts?
Thanks, Darren. Yeah, so this is probably appropriate for the ceasing congregation, I guess is where the question's coming from. So presbytery are currently going through the attestation of accounts. So it will depend on kind of where they are in that process, but presbytery are also aware of congregations that are uniting. So I would hope that these accounts would be prioritised. So the congregation still does have to wait until the accounts are attested before they can submit them to Oscar. And in an ideal situation, we would obviously prefer that to be the case. However, if the accounts are not attested by presbytery in time, the charity will unfortunately have been removed from the register and then will not be able to be submitted. However, as Leanne mentioned before, will not be in vain because we require a copy of the accounts within the stewardship and finance team to allow us to look at the accounts for Giving to Grow.
Thank you. We've had a question about the thresholds, which might mean you have to make up SORP accounts rather than receipts and payment accounts, and a congregation that is concerned they might not have the expertise locally to do that and might have to hire a professional accountant. If a congregation has to use a professional accountant, they're asking, can the costs of that be deducted from the assessable income calculation for Giving to Grow? Leanne.
Thanks, Darren. So the answer to that, I'm afraid, is no. Giving to Grow is an income-based system, so there's no allowance or deduction for use of professional accountants or other fees. But if support is needed, you know, try and get that from, I don't know, other treasurers, from Presbytery, from ourselves. So don't sit there and struggle. Please communicate and ask for help.
Thank you. And we have a congregation asking, once our accounts are finished for the 30th of June 2024, do they need to be examined by an independent examiner before being sent to the Stewardship and Finance Department? And what format should they be in? Lisa, you're the one that receives those accounts.
Okay, yeah, I think this has been mentioned already. Really, we just require the financial pages, so that would be the receipts and payments accounts, or the statement of income, balance sheet, or the statement of balances. There's no requirement to prepare the trustees' report. The accounts do require to be independently examined, though, as a requirement for the backup for the independent examination of the United Congregations accounts.
Robert, I wonder if I could bring you in on a question on buildings. When former buildings are sold, where are the funds held by the Church of Scotland? And how does the newly united congregation access those funds?
Thank you, Darren. So the first thing to mention, when the building's sold, any costs incurred as part of that sale will be deducted from the sale. So it'll be the money that ends up with the GTs will be net, and the kind of things that'll get deducted would be survey fees, the solicitor's fees, and any other searches, title searches, plans, anything else that is incurred as part of the sale process will be deducted. The other thing that'll be deducted that's worth mentioning is a 10% levy. So for every building that is sold, there'll be a 10% levy that is taken, and that money goes into the central fabric fund. So different from the consolidated fabric fund, the central fabric fund is the general trustees sort of redistributing the money from disposals, and that money is then given back to congregation in the form of grants and loans for fabric works, and that is on application to the general trustees. So that's where our grants come from. It's a 10% levy that's applied to sales proceeds of properties that are redundant. Assuming the property is vested in the general trustees, then when the property is sold, the remaining sales proceeds will be transferred to the consolidated fabric fund, and they are invested and generate an income. This is also the case if it's a locally vested building with an assembly control clause. Okay, so that applies actually to the vast majority of the buildings. Since the 1st of June 2024, revenue may be drawn down from congregations for any purpose that is aligned with the 5 marks of mission. It's no longer limited to fabric work or utility costs. So revenue would be any dividend payments or rental income, telecoms income that is made, and so that sits in a slightly separate pot from the capital. Revenue can also be drawn down for fabric purposes. Since the 1st of June, it can be used for any purposes that align with the 5 marks of mission. As I said, capital can now, as of the General Assembly just gone, capital can also be released for non-fabric purposes by application to the General Trustees. And this is considered on a case-by-case basis. It would be, I would think it would be fair to say that the congregation would have to have quite a lot of money in their consolidated fabric fund in the capital account in order to cover any future building works and general maintenance associated with the buildings. The GTs would need to be convinced that there were a sufficient surplus to account for the building related works before they would release money for any sort of missional projects. So yeah, I think that probably covers that. Darren, thanks.
Great, thank you. I think this next question is probably for you as well. What advice, funds or grants are available to the newly formed church for the maintenance of its buildings?
So in terms of advice, I'll start with advice. So it's kind of an easy answer. The majority of presbyteries now have a presbytery building officer. We don't have a national coverage yet, but I would suggest within the next 4 to 6 months, we should have presbytery building officers working in every presbytery. So in terms of advice on buildings, that would be the first port of call for congregations. And then obviously we've also got expertise within the presbytery itself, the property conveners and the teams that they work in. So there will be a lot of learned experience and professional expertise available to congregations, especially in the Reformed presbyteries. And then in terms of funding sources, obviously there's the general trustees, and I've just mentioned that the two different areas, the Consolidated Fabric Fund and the Central Fabric Fund. So the Central Fabric Fund is grants and occasionally loans, but usually grants that will fund building projects. And then also you've got the likes of the heritage bodies, the Heritage Lottery Fund and Historic Environment Scotland, and various other bodies like National Churches Trust and Benefact Trust. Don't worry about taking notes. I'm going to send out a schedule. One of my colleagues has prepared a really comprehensive schedule, and that was updated in May 2024, and that includes a power of information on this particular subject. So I'll send that out with the information that will follow the seminar. So don't worry too much about making notes and all of those things. We'll provide the information.
That's great. I wonder if I could also ask you a question about utilities and so on, where 3 congregations are uniting and keeping 2 of their church buildings plus 3 halls and a manse. Will each of those have separate energy accounts and so on? Will they have separate insurance, separate fabric funds? What's the situation there?
So dealing with energy, the actual account will be based on each meter will have its own account, but you will within the congregation have an account holder, and all those sub accounts will be under that same account holder, which makes things slightly easier, but you will have an account based on each meter. In terms of insurance, there'll be one insurance policy per congregation that'll list all the buildings that fall within that united congregation, and you'll also have one consolidated fabric fund. I think that deals with that, Darren. Yeah.
I've got a question about a church hall here. I wonder, Lisa, if you might take this one. This is a church hall that's hired daily and is to remain operational from the date of union on the 1st of July, but the church building is to close. The treasurer's resigning from the date of the union and is asking who will be responsible for the financial management of the hall from the 1st of July.
Right, okay, so it will be the trustees of the United Congregation that are responsible for the stewardship of the assets of the congregation. So the responsibility will lie with them. If somebody is resigning their position, then it's for the local congregation to agree who will be responsible going forward. So I would suggest that that conversation takes place beforehand, and then if there are any issues around that, contacts either made to Presbytery or ourselves for additional advice. But really, it's for a local decision to be made on who will be responsible for that going forward.
Thank you. Leanne, I wonder if I could ask you a question that relates to employees. In a situation where 2 cleaners are currently employed, but only one is going to be required after the union takes place, again, this one's happening on the 1st of July, who's responsible for running July's payroll for the remaining cleaner? And who deals with the formalities of ending the employment of the employee who's no longer required?
Thanks. So I got some advice from our HR team on this one, because whilst I know a lot, it's always best to double check when it comes to employment. And what they advise is that in the case of a union, a new contract of employment should be issued to employees who are remaining employed, because the employer is changing, and that contract should note the continuous service. A meeting should be held with the individual employee and explain why the change is necessary. And another good point is that consideration should be given to aligning the terms and conditions if these now differ amongst the United Congregation's employees. So things like salary for compatible work, pension provision, annual leave and sick pay. And on the redundancy aspect, legal advice on that should be taken from our law department, who are able to support local congregations through this, and they can provide template letters and guidance on the process. And I would say try and do that as soon as possible. If you're facing issues to do with employees, then don't delay. And in relation to who is responsible for ensuring that the hall cleaner is paid following the union, then that would be the trustees of the United Congregation. But as explained in the presentation, it is appropriate to keep the bank accounts open for a short time following the union. So it would be possible to run the payroll in July, as has always been, and then time it so that the following payroll could be made from the new bank account. Thanks, Darren.
Great, thank you. Lisa, if I could come back to you, I've got a question about Giving to Grow. This is from a congregation that has Giving to Grow contributions of over £63,000 per annum, which was a figure arrived at by combining the former two churches' contributions. But in this situation, not all former members have transferred to the new church. Is there any scope for a reduction in the Giving to Grow contributions next year? And I see there are a couple of similar questions come into the Q&A on this.
Right, okay. The regulations do make provision for us to revisit the Giving to Grow calculation once it's been prepared. So it is correct that when we look at amending the statements for the union, that we combine the income. So the process around that really, we need to make sure that the change in the income levels is as a result of the union, and we would ask for an appeal to be made in that respect. But we really need to see the actual results of what has happened contained within the first set of full accounts for the union. So that would mean that any unions that were taking place for this year in 2024, or perhaps maybe last year is a better example. For if the union had taken place in 2023, we would need to see a copy of the full set of accounts for this annual year to 2024, if that makes sense. And as I say, we would require full details of what had happened for us to consider and revisit the figures.
Okay, thank you. And Leanne, what happens if there are shortfalls in Giving to Grow at the point of a union and the congregation doesn't have any funds with which to pay those down? And what are the implications of that relating to permission to call under the Vacancy Procedure Act?
So existing liabilities, which include shortfalls, they would transfer to the United Congregation on union. However, as I'd mentioned, if there was property to be disposed of as part of the union process and the title was held to the General Trustees, or there was an assembly control clause, the shortfall could be paid from building sale proceeds before the balance would be transferred to the Consolidated Fabric Fund. We do share shortfall reports with Presbytery on a monthly basis, and we're looking to update these to include information relating to properties which are identified for disposal in the Presbytery plan, to kind of give a fuller picture of issues around shortfalls. And Presbytery should be looking into the shortfalls and determine if they are justified. And this is because in the Vacancy Procedure Act, it sets out that any unjustified shortfalls must be resolved, such as through an agreed payment scheme, before permission to call a minister is granted.
Thanks, Leanne. The next question is, what stewardship advice is available from the Church of Scotland, and what are your top 3 tips for increasing income? I'll maybe field this one to myself and say that the church has a team of 4 stewardship consultants who each cover specific presbyteries and work with congregations to offer bespoke stewardship advice for each situation. The team has a range of resources available on a variety of stewardship themes, including worship material, Bible studies, personal devotions, intergenerational activities, conversation starters, webinars, videos, information leaflets, lots and lots there. And we have also produced a resource specifically for congregations that are going into a union. We don't promote any single programme or solution, but can work with your congregation to support your own particular circumstances. In terms of top 3 tips for increasing income, once a preacher, always a preacher, I'll say 3 words that all begin with the same letter. The 3 tips would be to enable, encourage, and enhance. So first, to enable people to contribute. Key to this is including a time of offering as part of your worship, but it also means ensuring that there are mechanisms to support people to give, such as digital options for those who don't carry cash, or a giving day for people who wish to make a lump sum donation. Adopting a legacy policy and making use of our Faith Well legacy materials produced with Christian Aid and others can enable people to make a lasting gift to the church. And it's also important to look out and to see fundraising and income generation not just as a way to balance the books, but as a missional opportunity to invite people to be part of what God is doing through your church and community. The second tip was to encourage. Churches which talk openly about money benefit from increased giving. The stewardship team can help you explore this in an engaging way which helps people grow in discipleship. And never underestimate the value of simple encouragements like thank you letters, regular financial updates, easy to understand information about how money is put to use, or the sharing of good news stories. And the final tip was to enhance. Make sure you're getting the most out of your finances. Ensure that everyone who can has signed up for Gift Aid and that you're making the most of the Gift Aid small donations scheme. Explain to your givers the benefits of a regular committed means of giving, such as by standing order, and encourage people to review the amount they give if their income has gone up or down. And explore whether areas of your work could be eligible for grant funding and additional income streams, such as events or social enterprise. And again, we'll send you lots more information. And the top tip of all is to contact your stewardship consultant who can tailor something to your congregation. Next, we have a concern raised by a congregation that there was no prior indication given of the financial implications of a new union. As very few people came into the union from the congregations whose buildings were closing, the additional income only just matched the income which was lost through those leaving. The United congregation still has to meet the full cost of ministry, their manse costs are no longer shared in a linkage, and they've faced increases in insurance and maintenance of what are now closed church buildings, leading to a budgeted deficit of around £10,000 per annum. Leanne, would you like to comment just on the importance of going into a union with your eyes open to the finances?
Exactly. Thanks, Darren. Yes. And it sounds like a really hard situation to be in. And sometimes I think people think that it's rude to be asking about finances of a different congregation, but it's just really that advice and saying, please ask what the financial state is, ask to see the accounts, so that you do go into a union with your eyes open. Obviously, it's too late in the specific case, but as mentioned before, if you can demonstrate that the union has caused a significant reduction in giving, in income, then we would be able to look at that. And also to say that if you find yourself in a position, I think we talked about deficits of £10,000, where you can't meet your Giving to Go contributions or you can't meet other obligations, then please get in touch with us, get in touch with Presbytery to see how we can support you. And it's also worth mentioning that the stewardship team can work with uniting congregations to help them to do it well and minimise the risk of members not getting on board. And I believe that as part of the handouts afterwards, there's going to be circulated stewardship in unions, which I'm sure will be really helpful.
Thanks. Fiona, I wonder if I could ask you a question about Gift Aid. We've heard that new declarations for Gift Aid should be prepared in the name of the United congregation, but that it's not necessary to update existing declaration forms. We have someone asking, because the United congregation is a new entity, why is it not necessary for new Gift Aid declarations to be completed?
Thanks, Darren. Well, the legislation says that where a charity changes its name, that there's no need to obtain a new declaration form so long as the charity can show beyond doubt that the name of the charity on the existing declaration is the name previously used by the charity, which obviously we would be able to show. So no, there's no need to redo the existing declaration forms.
And on the Gift Aid small donations scheme, can the ceasing charity claim under that scheme for the partial year before they cease to exist at the date of union?
Yes, so the GADS or Gifted Small Donation Scheme can be claimed at any point within the tax year. You don't need to wait until the end of the tax year. And as Leon already said, all gift aid and GADS claims should be made for each separate charity using their pre-union details as soon as possible after the date of union, but before registering the United Charity with HMRC.
Another gift aid question. Does the closing congregation require to claim gift aid up until the date of union or until the date of their bank account closure? And can the continuing congregation claim gift aid on all contributions for both congregations from the 6th of April in the year of the union?
Okay, so maybe a wee bit of repetition here, but all gift aid and GADS claims should be made for each separate charity as soon as possible after the date of the union. But as I said before, registering the United Charity with HMRC. Gift aid claims are not related to the bank account closure date, but account should remain open until all the reclaimed tax has been received. That's important. The gift aid should be claimed separately by each congregation for all the donations made up to the date of the union and then jointly as the United congregation thereafter. And just for a little background information, the only thing that the tax year relates to is the gift aid small donations year, whereas your gift aid is related to your accounting year.
Thank you. Leanne, I wonder if I could come back to you with a couple of, there are quite a few questions coming in about bank accounts. How do we set up a new bank account for the new United Charge, which now has a new name?
I would say contact your current banking provider. So go to, and if the United congregations, if you have different bank accounts, it could be that someone has a branch and the person's really helpful and they can help you in person. So that's another way of doing it. Go in and say, how do I change it? So it's an existing account that needs a name change, using the extract from the OSCR register to demonstrate the change of name, and they should take you through that process and do that. So it's an existing bank account that needs to be changed.
And when should that change happen? When should the name on the continuing bank account be changed?
It should be following the union, but just remembering that it can sometimes take a few weeks for you to see that change. So a few weeks following the union is probably a good time.
And just speaking of changing the names on things, Fiona, how does the change of congregational name intimated to HMRC, how does that work for gift aid purposes?
Yeah, as I think Leanne mentioned in our presentation, that the new charity has to re-register almost with HMRC, and that's when the name change will be included. And that's used in the CHA1 form. But we'll give a link to that and guidance to all the other information that's needed as well in the follow-up documents.
Great, thank you. Madeline, can I come back to you with a question on funds? The congregation asking, we have 5 restricted funds, some of which date back to 1911. These funds were given to the church for specific purposes, including the upkeep and maintenance of family graves within the cemetery which surrounds the church. One of the other funds was given specifically for mission purposes in our congregation or its parish. What's the position regarding these funds once the building closes and they go into a union?
So for all restricted funds, it will depend on the wording, and we have to look very carefully at the wording from the donor. If the purpose is fairly general, so say as in Leanne's example, it was a flower fund for the church, say, you could use that in the United congregation, you could use that anywhere, you wouldn't need to change anything. I think one of the examples of from the people who asked the question was about maintenance of graves. And that's obviously in a very specific cemetery, that's a very specific purpose. That would have to be, that purpose would either have to stay the same, or we would apply to OSCR and ask if we could change the purpose at all. I think the point here is that there is no one size fits all answer, and it really just depends on the wording. And if anyone has any restricted funds that they're not sure about, to contact the law department and we'll be able to give advice.
Thank you. Lisa, I have a question here. I think someone's seeking a little bit of reassurance. If the funds from the ceasing charity are treated in the accounts as income, will those be assessed as part of the income base in the calculation of Giving to Grow?
Well, everybody will be relieved to hear that no, it's not. That's why we ask for the disclosure to show transfer of union balance. So when the accounts are being assessed, we pick up that figure and we ignore it for Giving to Grow.
Great, thank you. And while we've got you, how does the Stewardship and Finance team calculate the figures for 3 revised statements when there are only 2 sets of figures produced in the accounts?
Okay, so Leanne referred to this in her presentation. When we are preparing revised statements, what we do if it's a union of 2 congregations, for example, who are uniting on the 30th of June, we would prepare statements for the period from the 1st of July to the 30th of June for the 2 heritage, as I call them, heritage congregations. And then we would prepare a statement for the United congregation from the period from the 1st of July to the 31st of December. And that statement would be obviously apportioned, but we would use the income base of both congregations. If the congregations have either stipend endowment income or glebe income, that also is apportioned between the periods. So each of the heritage congregations would receive their amounts up to the date of the union, and then the amounts would be combined together and produced for the period for the remainder of the year. So in the example that I've given, from 1st of July to the 31st of August. We would also, I think the other thing to mention as well is that we would look at vacancy allowances. So there are situations where we may have congregations that are vacant. If congregations are linked and they move into a union, then the vacancy allowance can change. So that's the other thing to be aware of. But if there's any questions around the revised statements, then they can be put through our Stewardship and Finance mailbox. And just to really give an update as well on sort of timing around preparation of the statements. We're currently working within the team on unions that happened in May to get revised statements out to treasurers. But I know we've got quite a lot of unions happening this month, June, and also into July. So there tends to be a slight delay around when the statements are actually sent out to treasurers. But we are trying to, do that as timeously as possible. And I think the other thing I would like to mention is that standing orders in respect of the current Giving to Grow, it's if treasurers could make sure that those remain in place until we send out revised statements. We will take account of everything when, within the calculation and information that we send out to treasurers when we send the revised statements.
Great, thank you. We've had a lot of questions in advance, and there are even more tonight in the Q&A about business stream and water rates and so on. So Leanne, I wonder if I could give you just one of those to give us a flavour. 6 congregations will be uniting on the 1st of July, and all 6 buildings are being retained for the time being. What happens with business stream and the exemption from paying water rates? Are all exempt from 24-25? All congregations have submitted their 2023 accounts to OSCR, so they could now individually apply for exemption for 25-26? And will Business Stream merge their records with the separate supply points listed?
I'm not sure that I can answer this one that fully. It's not necessarily my area of expertise, but I will say that they use the most recent set of accounts. So if you've got the 2023 accounts and they're all, individual congregations, then for 2024-25, then the exemptions will be fine. And then if the United account takes the income over the threshold, so it will be the following year, then that exemption would be lost. So I think that's, yes, what they've assumed is correct, but I'm just not entirely sure about that last part that you mentioned. But we can find out, and it can be, I can confirm it in the detail that will go out in the handout.
Great, thank you. Madeline, can I come to you with a question about business rates? We've had a question in asking, will vacant premises become liable for business rates once they are vacated, as they may no longer be deemed as places of worship and would therefore lose any exemption to business rates?
Thanks, Darren. Yes, the rules are that if the property is no longer in use and is not being occupied as a place of worship, then the exemption is lost. I think in the first 3 months of the building closing, the relief is cut to 50%, and thereafter it is reduced further to 10%. But what we would say is that in many cases, a local authority will not enforce the rules immediately. And if a building is being actively marketed, then you may find that the exemption is not removed because the local authority maybe don't realise that you're not in occupation of the building anymore. I probably shouldn't say this, but it's probably not a good idea to draw it to the attention of the local authority. And it's another reason why we say that it's best to keep buildings in use for as long as you possibly can and not to close them early.
Thank you. We've reached the end of our allotted time for tonight's webinar, and there are a lot of questions that have come in and in the Q&A facility that still haven't been answered, but please rest assured we will answer all of them in writing with you when we follow up after the event.
Thanks, Darren. Thank you for getting through so many of the questions in the time that was available, and to the panelists for answering them so succinctly. And it did make a difference to have so many of them submitted in advance. I'm sorry it's not been possible to get through all of them, but I hope it's been a helpful overview, and we will follow up with more of the detail, and you'll be able to read it at a pace that you can cope with. I feel there's been quite a lot thrown at you this evening, but we will follow up with a link to this recording, with a copy of the slides that Leanne used in her presentation, and with the Q&A handout and all of those email addresses and links to useful information. So thank you for your time, thank you for coming, and thank you for all that you're doing. We really do appreciate that people are under a lot of pressure, and particularly those doing all of the kind of financial processes and just trying to keep everything right. We are here to support you, and we'll maybe look at having a sort of open surgery event in a few months' time where you can come on and maybe have a bit more time. We'll do it in smaller groups, that kind of thing. But, you know, we're here to help, and we want to be as accessible as possible. So enjoy the rest of your evening. And again, thank you for your time. Good night.